Hello folks, good morning. This is Charis Trading Institute, and today we are going to look at the dollar and foreign currencies. I'm going to show you my expectation for the dollar and foreign currencies. So as usual, we begin our analysis from the higher time frames, because the higher time frames are the main drivers of liquidity. The higher time frames are where the institutions position themselves. So we want to position ourselves like smart money. This is why we are looking at the higher time frames, the institutional order flow of the higher time frame, to guide us on where price action is going to go into in the forthcoming days and throughout the week. Okay, so this is dollar index, the weekly chart. For clarity, you can as well even look at the monthly charts to know where the institutions are going to head for on the monthly time frame. So this is the monthly time frame. Remember our previous analysis, we said that price had traded into a discount level. This is the buy side imbalance and sell side inefficiency already in a discount. Okay, when you use your Fibonacci levels between this low, this swing low, to this swing high, this is 50% of this entire range, and below 50% is also an institutional reference point, which is the fair value gap or buy side imbalance, sell side inefficiency. So price traded into that significant level, and we begin to see price resume its original institutional order flow. Okay, so we are currently bullish on the monthly time frame. And where is price going to head for on the monthly time frame? We see price heading for a sell side imbalance and a buy side inefficiency, which is this low to this high, this fair value gap. Okay, 50% of this fair value gap is called consequent encroachment, and this is this line indicating 50% of this fair value gap, which is consequent encroachment. I can also see a volume imbalance on the monthly time frame. Okay, this tiny level where you see price action involving only the wicks and excluding the body of the candles. Okay, when you see this is volume imbalance, and this is also a type of fair value gap. Okay, so price is going to trade into at least this level and at least 50% of this level. And ultimately, if price is going to continue bullish, I would like to see price trade into the buy side liquidity residing above this old high and above these relative equal highs, and there is a liquidity void by the left here that price may want to refill or rebalance. Okay, but we might still see price trade into more discount levels after it trades into this consequent encroachment or the bearish order block that has a fair value gap attached to it. Once we see price print another bearish signature, we would like to sell again, because this for me also looks like a classic market maker sell model that is about to unfold. Okay, we see price leaves a level of accumulation, distribution. We see reaccumulation. This is another reaccumulation, distribution, and then price trades into a premium level of this entire range, this high to this low. This is premium. Okay, so price traded into deep premium into the mitigation block. So we see price trade into a specific level, which is the sell side imbalance and the buy side inefficiency here. Okay, and price starts to run to the downside. Okay, so this looks like a classic smart money reversal. Okay, and has already created a sell side imbalance and the buy side inefficiency. We can see that it has a bearish order block, so this may also engineer smart money sell program. Okay, so once price returns to either the consequent encroachment or the bearish order block, and I see bearish signatures beginning to imprint on the lower time frames like the weekly, daily, and 4 hour, this may unfold a classic market maker sell model and a low risk sell on the dollar. Okay, So but basically we are currently bullish on the dollar. We are heading into the sell side imbalance and buy side inefficiency. We are heading for the consequent encroachment and bearish order block on the monthly time frame. On the weekly time frame, you can see that these levels are already outlined. What is the drawn liquidity? Buy side liquidity residing above this old high, buy side liquidity residing above this old high, and also sell side imbalance and buy side inefficiency here. This is our drawn liquidity. Okay, this is where we are looking to trade into short term. Okay, so this is our drawn liquidity, and this is where price is going to go into. Price is bullish, and if you study price action, you'll see that price traded into a discount level, found support at a fair value gap of that discount level, or buy side imbalance, sell side inefficiency. Then we see price starts to go bullish. In the last 4 weeks, we have seen a bullish order flow, because we see the willingness of the weekly candles to consistently take out the weekly highs, respecting the lows. Okay, this tells us that we are in a bullish order flow, and price is already close to a buy side liquidity. So this is going to head for that buy side liquidity. Okay, so you can see after this expansion or reversal, you can call this smart money reversal, price created an imbalance here, which is a buy side imbalance, sell side inefficiency, and price traded into it. Okay, price traded into it, smart money traded into that level here, picked up their orders, and we see price resume that bullish order flow. Right, so this is what we have on the weekly time frame. We are still bullish on the dollar. So on the daily time frame, again, last week we had an analysis that the dollar was going to go bullish, and the dollar played out exactly as we outlined. This is amazing, guys. So last week we were looking at the dollar trading into a volume imbalance, which was here. We already outlined that the dollar was going to find support on this level, this volume imbalance. If you have not watched my video, my previous analysis, you can just go to my YouTube channel, Charis Trading Institute, and watch some of these analysis. They're going to give you insight, they're going to give you clarity, okay, on smart money concepts, especially ICT concept, because that's what I trade. So guys, price traded into that volume imbalance, and look at this expansion from that volume imbalance. It's crazy, guys. Okay, so currently this is where we are. This is today's weekly candle open. So we are going to go to the weekly time frame to look at where the weekly open is, because we like to buy below the weekly open and we like to sell at or above the weekly opening. So our weekly opening is, the price is 105.260. This is where the opening is. You can see here, once you put your cursor on the candle, it's going to give you the opening 105.260. So I'm going to set my my horizontal line to 105.260, so that I have a specific level for the opening. So this is indicating the weekly opening. Okay, price may like to give us a level of retracement before it starts to trade bullish one more time. Okay, so if price is going to retrace to the downside, what level are we looking at? I'm looking at this fair value gap. Okay, for price to form the low of the week at this fair value gap, or price may as well trade into deeper levels, okay, which are this volume imbalance. So on the daily time frame, I'm looking at price retracing into these specific levels to form the low of the week before we start to trade to the upside. And this is our weekly candle open. Price is currently below it. I would like to see price at least trade a little bit into this fair value gap, okay, discount fair value or volume imbalance in here to form the low of the week before we start to go bullish one more time. But as well, price may ignore these levels because we are already close to a buy side liquidity level, which is residing above this old high. So price may likely just trade into it, take out that liquidity and continue to go up. Okay, are there other levels above it that price may likely want to trade into? Yes, this volume imbalance above it, okay, is also a significant level I'm looking at. Institutions might like to rebalance that level. Okay, so you can see that this volume imbalance, this bearish order block, price will likely want to trade into this level. Okay, immediate time, this is what I'm looking at, and that old high. And again, if you do your look back analysis and cast forward analysis, this coincides with the high of the previous 40 days. Okay, this coincides with the high of the previous 60 days. So for me, this is really where the institutions are looking at. Okay, if you also blend this with quarterly shift, we are in the first quarter of the year, so and price has been showing reversals throughout the beginning of this year. Okay, and going into this first quarter, so we like to take the highs of the last 20, 40 and 60 days. So this is my analysis on the higher time frame. So on the 1 hour time frame, I'm going to go down to see if price gives me an opportunity to go bullish already. So this is the 1 hour time frame. I'm not going to do anything until London open, which is 8 a.m. GMT +1 or 2 to 5 a.m. New York time. So whatever country you are, you may need to convert 2 to 5 a.m. New York time into your local time, so that you know the specific time the institutions are going to engage. Okay, so at London open, I'll look at what price is doing, and I'll find smart money divergence between the dollar and foreign currencies, and I'll look for breakup structure, or I'll look for the 1 hour time frame to create an expansion, and I'll be shorting GbpUsd on return to internal range, and I'll be buying the dollar when it returns to the internal range of the recently created range. Okay, during those sessions. So let's look at GbpUsd. So this is GbpUsd. This is my previous week analysis, and I'm still with this bias. We are bearish on pound dollar. Price is going to trade into sell side liquidity residing below these old lows, and also rebalance this buy side imbalance and sell side inefficiency of the weekly time frame. Okay, so this is my analysis for the pound dollar. Then on the 1 hour time frame, let's look at what we have. This is the 1 hour time frame. Okay, this is my last week analysis. As you can see, it played out perfectly. The price traded to the very take profit points, okay, on Friday. Yeah, so this is where we are now. Well, I would like to see price give us a little bit of retracement into internal range. Preferably, I would like to see price trade into this internal range, this high to this low. Okay, I'd like to see price return at least 50% of that range and trade above it. Then I'll be shorting. So this is 50%, then I'll be shorting GbpUsd, or I'll just like to wait and see what happens at London open. If price gives me smart money divergence, then I'll be comfortable shorting GbpUsd, okay, using those confirmatory signatures. So but this also works for me. If I see price trading to this level, I like to see price trading to that level, especially in London or New York today, to probably form the high of the week, and then we short again, we short again, we short again. So guys, this is my analysis for the dollar and foreign currencies. Just know that the dollar is bullish. You like to be shorting foreign currencies across board, and I would like to short GbpUsd specifically because I trade only one pair. So the last thing you should be doing is to look at your economic calendar to know what's happening on the fundamental aspect. So this is my economic calendar for the week. Okay, this is Monday 27th February 2023, and as you can see that we may have a low volatility day today. Okay, not really a low volatility day because we have a medium impact news on the dollar coming 2:30. Okay, on Tuesday we have the dollar high impact news coming by 4 p.m. okay, CB consumer confidence and news. Wednesday we have AUD 1:30 a.m. for those of you trading the Australian dollar. We have GBP by 11 a.m. okay, those of us trading the pound dollar, and USD by 3:45. So Wednesday is going to be our most volatile trading day. There's going to be more volatility on Wednesday, okay, across board. Wednesday and Friday too has a high impact news on the dollar, but across board Wednesday is going to be our high volatility trading day. So this is what is happening on the fundamental basics. Well, I would like to see the dollar form that low of the week either between 2:30 Mondays or around 4 p.m. on Tuesday. Okay, this is where when I'm looking to see the dollar form the low of the week so that it starts to go up, okay, and the pound dollar to form the high of the week so that it starts to go down. So guys, if you like this analysis, I would like you to quickly subscribe to this channel, Charis Trading Institute, for more of these educational videos. And until next time, I wish you good luck, good trading.